If you run a home care agency and you've set up your system and you understand how the 250K rule works, the next step is avoiding the mistakes that can still cost you. Because even with the right system, these are the areas where I see agency owners run into trouble. I'm an enrolled agent, a federally authorized tax professional with over 14 years of experience in tax and accounting, and I focus on helping home care agency owners understand their numbers and stay compliant. So let's walk through this simply. Mistake number one: mixing business and personal finances. This is one of the most common issues I see. Technically, if you're a sole proprietor or a single member LLC, this can happen occasionally, but it should still be avoided as much as possible because once business and personal transactions start mixing together, it becomes much harder to track your numbers correctly. And if it does happen, it needs to be properly recorded as an owner contribution or an owner draw. Now, if you're operating an S corporation or a partnership, this separation becomes much more important because these are separate legal entities, and mixing business and personal finances can create compliance issues, poor record keeping, and in some cases, even weaken the legal separation between you and the business. Which is why keeping clear boundaries matters so much. Once your records become unclear, everything else becomes harder. Your reporting, your tax filing, and your decision making. Mistake number two: not tracking expenses consistently. Some expenses are recorded, others are missed, and by the end of the month or the year, things no longer add up. For example, you may record caregiver payroll but forget smaller expenses like mileage, supplies, or software and subscriptions. And over time, those missed expenses affect your numbers. Because if something is not recorded correctly, your profit may appear higher than it actually is. And that can directly impact your taxes. Mistake number three: relying on incomplete systems, tracking revenue from your agency software, and not having a complete system for expenses, assets, and liabilities, which means you don't actually have a complete financial picture. And without that, it becomes much harder to stay compliant, especially as your agency grows. Mistake number four: letting things pile up for too long. Monthly accounting work is normal, but waiting until the end of the year or failing to maintain consistent routines throughout the month is where problems begin. Because by then, things become overwhelming. This is where errors happen, transactions get missed, and unnecessary stress starts building up. Mistake number five: not keeping proper documentation. This can look like missing receipts, missing invoices, missing payroll records, or having records spread across multiple places. Some records in spreadsheets, some inside an operation system, some inside an accounting software like QuickBooks, some missing completely. And when records are incomplete, expenses become harder to support, which puts you at greater risk if your records are ever reviewed. Mistake number six: misclassifying workers. This is a major issue in the home care industry. Many agency owners treat caregivers as independent contractors when they should actually be employees. And this can create serious payroll tax issues penalties and compliance problems because the IRS looks closely at worker classification, especially in labor intensive businesses like home care agencies. This is why proper payroll setup, documentation, and classification matters so much. Now, here's the key takeaway. Most tax problems do not come from complexity, they come from inconsistencies. Small gaps over time become much bigger issues. But when your system is set up correctly and used consistently, you reduce that risk significantly. Now that you understand the most common mistakes, the next question becomes, how do business owners legally lower taxes without creating more problems later? Because good tax strategy is not about shortcuts. It's about proper planning, clean records, and making smarter financial decisions throughout the year. In the next video, I'll walk you through how business owners legally lower taxes and what strategies actually make sense as your business grows. And once you understand that, you'll start looking at taxes very differently.